Do you think you could live without smartphones, computers, cars, or even AI electronics as we know them today? Sounds impossible, right? Like it or not, they've become an integral part of our lives. And what lies at the heart of modern technology? Semiconductors, driving innovation and enabling the devices we can't live without. From the latest gadgets to the most advanced industrial machinery, semiconductors play a crucial role in our daily lives. The companies making these semiconductors are sitting on huge upside potential, but selecting winners that will stay here for the future is way harder than it looks. So how can you invest in this booming sector and select the winners? The answer is semiconductor ETFs. In this video, I will show you once-in-a-lifetime opportunities to grab the 5 best semiconductor ETFs and discuss why this year is pivotal for the industry. In the end, I will show you a semiconductor ETF that has the potential to turn a $10,000 investment into over $10 million over the long run. Let's kick off with the First Trust NASDAQ Semiconductor ETF. This ETF is a fantastic way to tap into the booming semiconductor sector. FTXL tracks the NASDAQ US Smart Semiconductor Index, which includes companies primarily involved in the design, distribution, manufacture, and sale of semiconductors. What's great about FTXL is its diversified portfolio, featuring top-tier semiconductor companies like Intel, NVDA, and Texas Instruments. These holdings are carefully selected and based on factors such as liquidity, market capitalization, and growth potential, providing a balanced mix of industry leaders and innovative up-and-comers. Sector-specific ETFs like FTXL do come with slightly higher risk levels compared to broader market ETFs. But here's the upside. The potential for high returns is significant. Looking ahead, FTXL presents some compelling future projections. Currently, it offers a dividend yield of 0.50%, with an average dividend growth rate of 18.19%. Over the past decade, its shares have shown an average growth of 13.80%. Analysts on Quant Ratings have given it a strong buy rating, reinforcing its potential as a lucrative investment. Let's put these numbers into perspective if you invest $10,000 in this ETF. After just 1 year, that investment could grow to $11,430. Fast forward 10 years, and you're looking at $38,431. In 20 years, that investment could balloon to $151,988. And after 30 years, a whopping $628,012. The dividends alone after 30 years could amount to $9,448. Overall, your total value added would be $618,012, with capital appreciation accounting for $562,127, and dividend reinvestment contributing an additional $55,884. Given the strong buy ratings from analysts and the robust growth projections, FTXL is positioned as a compelling choice for those looking to capitalize on the booming semiconductor industry. Next up is the Granite Shares 2x Long NVDA Daily ETF, an intriguing option for those looking to leverage the growth of one of the biggest names in the semiconductor industry, NVIDIA. This ETF aims to deliver twice the daily return of NVIDIA's stock, making it a compelling choice for investors seeking amplified exposure to this tech giant. This singular focus can be both a strength and a risk. If NVIDIA performs well, NVDL can provide exceptional returns. However, the reverse is also true. If NVIDIA's stock takes a hit, NVDL will magnify those losses. Leveraged ETFs, by their nature, carry higher risk. The daily resetting of leverage means that holding this ETF for longer periods can lead to unpredictable results due to the effects of compounding. Therefore, NVDL is best suited for investors with a high risk tolerance who are looking to capitalize on short-term movements in NVIDIA's stock price. Looking at future projections, NVDL offers no dividend. This ETF is all about capital appreciation. Over the past 10 years, NVIDIA's stock has shown an impressive average growth of 18.59%, and analysts on Seeking Alpha have given it a strong buy rating. According to Quant Ratings, it's also a strong buy. To show the potential of NVDL, let's break down the numbers. If you invest $10,000 in NVDL, after 1 year, your investment could grow to $11,859. After 10 years, this could skyrocket to $55,015. Fast forward to 20 years, and your investment might reach $302,664. After 30 years, the projection is an astounding $1,665,107. And that is purely from the increase in NVIDIA's stock value. Investing in NVDA is a high-stakes, high-reward strategy. If you believe in NVIDIA's continued dominance and innovation in the tech industry, this ETF could potentially transform your investment dramatically. With no dividends to reinvest, every bit of growth hinges on NVIDIA's performance, making it a pure play on one of the most influential companies in the semiconductor space. Next, at number 3, we have SPDR S&P Semiconductor ETF. Another solid choice for investors eyeing the semiconductor sector. XSD seeks to provide investment results that correspond to the total return performance of the S&P Semiconductor Select Industry Index. This ETF includes a diverse mix of semiconductor companies, making it a balanced option for those looking to spread their investment across the industry. Its major holdings include companies like NVIDIA, Micron Technology, Semtech, and Cirrus Logic. In terms of risk, XSD carries a moderate level compared to more concentrated ETFs. The semiconductor industry can be volatile, but the broad range of companies within XSD helps to smooth out some of these fluctuations. This makes XSD a suitable option for investors who want exposure to the sector but prefer a bit more stability. Future projections for XSD are promising. The current dividend yield is 0.23%, with an average dividend growth rate of 12.59%. Over the past decade, the ETF has demonstrated an impressive share growth of 20.95%. Analysts on Seeking Alpha have given it a buy rating, and Quant ratings also reflect a buy. To give you a clearer picture, let's break down the numbers. Investing $10,000 in XSD could grow to $12,118 in 1 year. In 10 years, this investment could reach $67,890. After 20 years, the value might soar to $457,370. And after 30 years, it could hit an astounding $3,071,356. The total value added would be $3,061,356, with capital appreciation contributing $3,056,836, and dividend reinvestment adding $4,520. $3 million is a solid return, but there are even better options. And in the end, I will show you a semiconductor ETF that has the potential to turn a $10,000 investment into over $10 million over the long run. Next on our list is the Shared Semiconductor ETF, a popular choice among investors who want broad exposure to the semiconductor sector. SOXX aims to track the investment results of an index composed of US-based semiconductor companies. This ETF provides a balanced mix of large, established companies and smaller, high-growth firms, making it a versatile option for various investment strategies. SOXX's holdings include major players like Intel, NVIDIA, Broadcom, Qualcomm, and Texas Instruments, along with emerging companies driving innovation in the semiconductor space. This blend of established and emerging companies also helps to balance risk and reward, offering the potential for significant growth while maintaining a level of stability. That's why the future projections for SOXX are quite promising. The current dividend yield stands at 0.57%, with an average dividend growth rate of 16.82%. Over the past decade, the ETF has shown an impressive average share growth of 23.93%. Analysts on Seeking Alpha rate it as a hold, but Quant ratings give it a strong buy. To showcase the potential of SOXX, let's look at the numbers. If you invest $10,000 in this ETF, after 1 year, your investment could grow to $12,450. After 10 years, this could increase to $88,388. In 20 years, your investment might reach $767,652, and after 30 years, it could soar to $6,611,205. The dividends after 30 years would amount to $3,580 annually. The total value added would be $6,601,205, with capital appreciation contributing $6,574,505 and dividend reinvestment adding $26,700. The mixed ratings from analysts and Quant models suggest some caution, but the overall potential for significant gains makes SOXX a compelling choice. Whether you're looking to add stability to your portfolio or aiming for high growth, SOXX offers a solid pathway to achieving your investment goals. Finally, topping our list at number 1, we have VanEck Semiconductor ETF, or SMH, a top contender for those looking to invest in the semiconductor sector. SMH seeks to replicate the performance of the NVIS US-listed Semiconductor 25 Index, which includes some of the largest and most influential companies in the industry. This ETF provides a mix of established market leaders and dynamic investors, making it a powerful option for investors. SMH's holdings feature a range of prominent semiconductor companies such as Taiwan Semiconductor Manufacturing Company, NVDA, and ASML. This diverse portfolio allows investors to benefit from the growth of both well-established giants and emerging players in the semiconductor space. When it comes to risk, SMH carries a moderate to high level due to its concentration in the semiconductor sector. The industry is known for its volatility, driven by rapid technological changes and market cycles. However, the ETF's broad exposure within the sector helps to balance some of these risks, making it a viable option for investors with a higher risk tolerance. The future projections for SMH are even more promising, with an average dividend growth rate of 12.21%. Over the past decade, SMH has shown an impressive average share growth of 26.55%. Analysts on Seeking Alpha rate it as a hold, while Quant ratings suggest a strong buy, indicating confidence in its growth potential. To give you a clear picture, let's look at the investment projections. If you invest $10,000 in SMH, after 1 year, your investment could grow to $12,696. In 10 years, this could increase to $107,235. After 20 years, your investment might reach $1,133,972. And after 30 years, it could hit an astonishing $11,955,658. The total value added would be $11,945,658. with capital appreciation contributing $11,940,554 and dividend reinvestment adding $5,104. If you are interested in less risky investments and still want to secure $100,000 in annual income from dividends, watch this video to learn which 3 ETFs can help you achieve that.